Hello, new week, and I haven't taken any trades today. I am going to run through the tape reading that I've done. I lined up 2 trades. First one was a hindsight one, the second one was just one that I wanted to see if it would play out. It's still ongoing at the moment. But yeah, there's pretty much no news Monday today, so as you can see, we're not above previous daily high, previous daily low on the S&P, but on the Nasdaq, we had traded up above previous daily high, and we got a new week opening gap. Same on here, and yeah. So with the ICT concepts, there were 2 trades you could have taken today, and I'm just going to get into it. So you can see here, got a big imbalance. Price trades up from the London session and creates our buy side liquidity. We got our sell side by the London lows, and from here comes down, and what time is this? It comes down 7:15. Then you get your push up at 8 o'clock to sweep this buy side, and that creates our 4-hour high on the candle. So for reference, well, it looks a bit messy here. Hang on. That is this high here, and that's basically the target or the trade idea for the second position that I've marked out. Yeah, just a bit of live back testing, I guess. So forward testing. I don't know, just tape reading. Yeah, so from here, what we've got 8 o'clock. So from 8:30, price manipulates down, and I think on a 5-minute it's more of a displacement. Yeah, so you can see here. Come on, zoom that out. Yeah, so we get the displacement here, and then shortly after that, coming up to 9:30, we trade back up into this fair value gap that forms. So this is actually our breaker structure in a way, and then the entry would be in this fair value gap according to the ICT turtle soup model, and then target London low, obviously the first draw in liquidity, internal draw, and then the external draw being the weekly opening gap, which is our higher time frame point of interest. So that would have been a 2.45 to 1 trade. As you can see here, price bounces quite nicely off of this zone, and in line with the model, well, not in line with the model, but in line with the silver bullet model, when price trades down into a higher time frame point of interest and has a quick reaction off it, that is usually a sign of a reversal, evidenced by this big candle here, break structure on the 3-minute chart, and then yeah, from here you're waiting for a fair value gap to enter. I think there was one on the 1-minute chart at one point. Where would it be? Not here. Yes, so you could enter long here, target same spot, but you know, I was just watching today. Price tends to move more. The draws on liquidity are targeted more by price action on a no news day compared to a red folder day, where the news driver is what's really like implementing the change. But yeah, so you can see here we've got the first bit of liquidity taken at the first sell side, and then this bit here, that's the sweep there, and then we get this big displacing candle. I'm not sure if it's an inverse. I wouldn't say it's an inverse fair value gap, but it's a big displacement candle or breakaway gap. But there was also, I think on a 5-minute, yeah, so this 5-minute fair value gap here, I'll just mark that out quickly. It was a bit later into the session that this took place, But my idea was basically we target the previous 4-hour high after sweeping the low, just for like a lower time frame model compared to, you know, previous daily high, previous daily low business. And yeah, the entry would have come in at about 11:10. Since then, it's now just coming up to 1 p.m. New York. So I would anticipate in the PM session that price maybe comes down a tad and then just pushes up here, possibly to then go on for the previous daily high. So yeah, no trades today, just take reading, and as you can see, this is 2.5 to 1 and a 2.45 to 1. So two very nice trades that you could have, well, that I could have taken, but staying disciplined, respecting my model, and just waiting. I think we're going to get a nice push here. But yeah, no doubt in PM session we'll sweep this. So I will catch up on that tomorrow. In terms of the Nasdaq, you know, we've got this weekly opening gap, but we also had, I think it was is it 15 minute or 1 hour? I think it was an hourly fair value gap here. Reset this, zoom in a bit. Yeah, so you can see we got the hourly fair value gap here. Price taps it twice and then pushes up. So this is our SMT. Nasdaq is a bit more bullish than the S&P, and at the same time, because we filled this on the 15-minute, well, not filled it, but we tapped it on the 15-minute, that's another indicator with, or another confluence with that breakaway candle that we mentioned, that price is going to continue upwards, particularly since the S&P has already taken previous daily high and is now trading above the previous daily high. So yeah, it's a bit of a bullish sentiment for Monday. Yeah, I think that's mostly it for the day. I did anticipate off this first bounce that price would have to, you know, come down a bit further, maybe tap it one more, completely fill the hourly fair value gap. And as you can see, all the bodies of the candles have respected that fair value gap, and it's literally just the wicks that have bounced off. So this would act as the sweep here, and you could go long, possibly on a smaller time frame here. Where would you go long? Not actually sure. Maybe not on here. I don't think there actually was a setup. But yeah, I was looking at this initially for a inverse fair value gap to then come down, but the way price is laid out at the moment, it's just very bullish, and I wouldn't anticipate that we come all the way down here, considering we've got the weekly gap here. London low taps into this imbalance, and yeah, it's just been very bullish today. So the eToro portfolio is looking cozy at the moment, and yeah, I think with the US government shutdowns, I'm going to continue to remain cautious unless the model does present itself. So nothing rash this week, I wouldn't anticipate. And yeah, we can go on to the 4-hour chart again. So you can see, let me just take all the drawings off. Yeah, it's price is already traded down here on Thursday last week, tapped. So that's a nice little breaker there, or not breaker, but continuation of the trend. And then since then, it's just been a bit choppy. I think on the hourly, it's a bit more reasonable. However, where is that 4-hour high? Yeah, so that's a fairly reasonable target, I feel, especially in line with this imbalance. And I wouldn't be surprised if we come up, sweep this, and then see a move down at one point, or you know, we just continue ripping. Everything seems to be on that wavelength at the moment. Gold is fine, and has been for the last, what, how many days is that in a row? Green. Oh, just 2. and Bitcoin ripping. I think we're at all-time highs. Yeah, so we've now hit Sunday was all-time high. Yesterday was all-time highs. We just had a little retracement today, and then pushed back up. So 125k Bitcoin is pretty nuts, to be honest. It's pretty mad to look back at this setup here on the weekly candle, and I literally must have drawn this out, yeah, in around January, February time, and didn't buy it. So yeah, I wouldn't be surprised to see Bitcoin come up to 150k, 170k, around that sort of range. There's definitely room for it to go higher, and then in turn that will drag Ethereum up. This is definitely a much longer time frame setup. This is on the monthly chart. So Ethereum, I would be predicting it at around 6.75. I do have a couple take profits at this point. In my eToro account, I have a couple take profits at 6.75. I understand that like it's probably smarter just to hold it all the way up to like, what can you go up to, 8.6, but you know, ideally I do want to take some profits out of Ethereum because I'm not sure how long this bull run's going to go on for. In terms of Solana, yeah, I mean, similar sort of thing going on at the moment. We filled this imbalance across here. Nice reaction back down. And then continuation, wouldn't be surprised we see this push up a bit more. Eventually, I do want to see Solana up at like 330 and then 413, but I think we've got quite a way to go before we see those sorts of prices, with the all-time high being, what is that, like 240, 244. And yeah, do one more. Taketwo, which is a company that owns Rockstar Games, is now very much set in place and has been ripping in anticipation of the GTA 6 release. I wouldn't be surprised if, you know, you see share price come over 350 after, I don't know, what's that, 28, 29, yeah, over the next couple of years. 350, 400 is definitely possible with GTA 6. Like, you think about online and all the revenue they're going to generate, everyone is going to be playing GTA 6. Like, it'll be the biggest game in the last 15 years or the last 13 years, 14 years. So yeah, I've been in Taketwo since maybe, I think, where was it? I think it was around like 170 or so. Around here I got in on my first entry, and I've just been dollar cost averaging all the way up basically. And so yeah, hoping to see that play out. It's more of a long-term play. And yeah, I don't really have anything more to talk about today. Let's have a look at the S&P. Yeah, I do just have a feeling about this, you know, again, all this consolidation here. Either, well, I don't know, maybe price comes down, sweeps everyone out, stops everyone out, and then goes up. But I'm just seeing this, taking this 4-hour high. So yeah, I will check back in tomorrow on how this is looking, and with that I will catch you in the next one.